Another advanced strategy that you can utilize with the impulse MACD indicator is by using it to hunt breakouts. So first, let's start with the definition. A breakout is when price makes a sudden and significant move towards one direction. And if you could take advantage of these significant moves, it could result in a massive profit with minimal risk. And so, a common pattern that tends to happen is that breakouts tend to form after a long period of ranging or sideways market. And by using the impulse MACD's ability to identify these ranging markets, we can use it to our advantage and find breakouts before they happen. So here's how you create the strategy. The first step is finding a range market, and we can do that by waiting for the impulse MACD to go flat, as shown here. However, you also need to take into consideration the length of the flatness. Remember, we only want to use signals where the impulse MACD goes flat for a long period of time. We do this to ensure that we don't get a false signal, because the longer the market stays within range, the higher the chance that a breakout would happen. Now, once you've identified the ranging market, the next step is predicting the direction of the breakout. Will it happen to the upside or the downside? And so the way you do this is by looking for signs of rising momentum as shown by the histogram, which are the bars that you can see on the middle. So let's look at an example of that. Here, we can see that the histogram is currently flat. And after that, it slowly starts rising towards the upside, as reflected by the price also going upwards, indicating that the overall momentum is bullish. Which means, based on this example, we can conclude that the breakout will likely happen towards the upside. And so this is a good opportunity to take a buy position. Next, you also need to make sure that your risk management is on point. Now, because this is a breakout strategy, it means that it can have a high profit potential while maintaining low risk. Which is why for your stop loss, you can set it just slightly below your entry position right here. And as for your profit target, you can set it slightly higher. A typical breakout strategy usually has around a 3-to-1 risk ratio, and so you can set it at 3 times the length of your stop loss. And as you can see, this trade ended up being profitable.